In this video, we'll examine the sale price for the England and Wales privatised water industry when it was fully divested from the UK state in 1989. The 10 regional water authorities of England and Wales were sold for £5.24 billion in 1989 prices. Well, that's about £11.75 billion in 2015 prices. The England and Wales population was around 49 million people in 1989, or about 22 million households, so the sale price equates to about £240 per household in 1989 prices. First, let's look at the sale price from the viewpoint of an investor. This could be an individual investor in the UK, say, buying a small amount of shares, or corporate investors from the UK or overseas buying larger numbers of shares. Both will try to estimate what the shares will return. The most public moment where this issue would have become clear was the sector's London Stock Exchange flotation. Sadly, I wasn't there. I was 15, as I've said. I did see TV adverts about water privatisation, but my family didn't buy any water shares. Photos of the water industry flotation itself are hard to come by. If you were there, please share your experiences on the discussion forums. But I imagine the scene was similar to this Financial Times newspaper photo of the London Stock Exchange in 1984. This is a photo of dealing in shares not for the water industry, but following the flotation of the privatised telecoms company in the UK, British Telecom, or BT. That scene was described as pandemonium in a UK Financial Times newspaper report, and I imagine things were quite similar for the water flotation. On 12 December 1989, 100% of the equity for each of the 10 main water companies was offered for sale, fully underwritten by the UK government. The general public could buy shares, and indeed 44% of shares were sold to the general public. Special share packages were offered to UK institutions and overseas investors, and 3% of shares were retained for water company employees and for water company bonuses. The UK government retained a special so-called golden share in each water company, valid until December 1994. The government was concerned about the operational and political risks from immediate overseas takeovers. This golden share arrangement aimed to prevent that for 5 years. After that time, the golden share was redeemed and foreign takeovers did take place. In setting the sale price, the UK government thought the water industry was a riskier proposition than its earlier privatisations, say of British Gas. There were uncertainties about the amounts of capital investment that were going to be needed to meet new drinking water quality and environmental quality standards. The new water regulation setup was untested. So in setting a sale price for the water sector, ministers in the Department of the Environment and the Welsh office made a judgment call. According to a paper by Dieter Helm, they also considered a real rate of return of 7% to be reasonable, given the levels of risks to investors and the broader economic climate. This settlement would allow the water companies to charge average water prices above inflation for the subsequent 10 years. Government ministers also made a judgment call that a test of whether they had set a reasonable sale price for the water industry would be if the shares for all the water companies commanded a premium in the range of 7 to 10% over the initial offering price after the first day of trading. The price of the initial offering was set at £2.40 per share in 1989 prices. At the close of trading, on the day that shares were offered, that was 12th of December 1989, the average share price closed at £2.80 per share. That's an average premium of 8.7%, so government ministers were probably happy. Another measure of whether the sale price was too low was whether the share offer had been heavily oversubscribed. This was one measure of whether there was more demand for shares than there was supply. If the oversubscription rate was too high, then it's possible demand could have permitted a higher sale price, which would have raised more capital. For the England and Wales water privatisation, the share offer was almost 3 times oversubscribed. This does not seem unacceptably high. Initial public offerings can often be much more oversubscribed than this. Water shares continued to perform well into 1990. They outperformed the FTSE All-Share Index. By January 1990, the average premium over the initial offering for all the water companies' shares was about 20%. Although this was above the government's initial target, given all the risk and uncertainties here, this seems quite close to the sale price. There are some considerations about the sale price that we need to discuss briefly. They do not affect the issue of whether the sale price of the industry represented good value to investors, because that issue was addressed by the investors' behaviour. They made judgments about the future value of the revenue stream from the industry, discounted over time, which would accrue to them as the new owners. However, Some additional considerations may leave the water privatisation open to criticism as to whether the process itself was a fair, sensible way to transfer ownership from the public to private shareholders. This could affect the legitimacy of the sector in the eyes of the public. I'll again draw here upon the 2006 joint DEFRA-Ofwat document about the England and Wales water industry's history, and on official data from bodies like the UK's National Audit Office, which scrutinises the value for money of public spending. So let's look more at the £5.24 billion sale price. There were costs to government passed on to taxpayers to make the sale. For instance, there was some restructuring to the industry to facilitate the sale. This cost was £240 million in 1989 prices. The privatisation sale was administratively complicated. The sale administration cost a further £131 million. The UK government also did something that is typically written about as cancelling or writing off all the long-term debt owed by the England and Wales water and sewage companies. That was an additional £4.95 billion in 1989 prices, or about £225 per household. But this was in effect an internal government transaction that did not affect the aggregate balance sheet of the state or taxpayers. However, it did mean that the new private water companies did not have to assume the debt, making them more attractive to investors. But of course, these investors also knew that the privatised water sector was going to be required very soon to invest heavily to rehabilitate the existing networks and to meet new and more demanding EU water, wastewater and watercourse quality standards. Private investors still would have to factor in these forthcoming expenditures when they considered what they were willing to pay for the shares. There was also uncertainty about exactly what would have to be done and how. The EU compliance costs at the time were variously estimated to be between £24 to £28 billion, or that's around £1,100 to £1,270 per household in 1989 prices. In fact, more EU directives followed later, like the Water Framework Directive and the Environmental Quality Standards Directive. These also had uncertainties in their estimated costs of compliance, and these costs were estimated to be around £10 billion and £27 billion respectively. But back in 1989, the UK government did contribute £1.5 billion, or around £70 per household, towards the original £24 to £28 billion investment requirement. This was a so-called green dowry for the sale. Capital tax allowances of £7.7 billion, again in 1989 prices, were also made, or that's about £350 per household. A capital tax allowance here is money a business can deduct from its income or corporate tax liabilities or depreciation considerations. Overall, the DEFRA-Ofwat history document describes these various sale arrangements, and I quote here, as having the effect of eliminating any proceeds to the taxpayer from privatisation. This was a point of contention picked up politically in 1997. The then newly elected Labour government in the UK retrospectively levied a so-called Windfall Tax. This was on industries privatised under the previous Conservative government. It was based on the Labour Party's political view that these industries had been sold off too cheaply. And it was a kind of political response to public ill-feeling and media stories about things like excessive profits and executive salary fat cats in the England and Wales water privatisation, as we'll see in our later videos. The windfall tax across all the privatised utilities was about £5 billion. Around £1.7 billion of that was levied on the privatised water industry, or that's about £1.24 billion in 1989 prices, roughly equivalent to the green dowry. We have to remember, though, that there's no counterfactual in this story. We do not know what may have happened without privatisation here. Would England and Wales citizens have reliable, 24/7, high-quality piped water services both now and for the foreseeable future? Or a trajectory of continued deterioration? In 1989, we can remember, the public water utility assets were crumbling and failing their quality standards. Those assets would not have been able to meet higher standards in future. Investment would have been needed to improve them to meet higher standards, even if privatisation had not happened. This would have meant costs to water customers, directly through higher water prices or through general taxation otherwise, to comply with these higher standards. As we've seen in our prerequisites video, this investment was not happening. There's a parallel here with many developing countries' water systems. In such countries, existing infrastructure is often worth little in terms of its ability to deliver future service. In England and Wales, households were already bearing costs of various kinds, as we've seen. Customers were suffering the results of significant sewer collapses, service interruptions, low water supply pressure, poor water quality, and a polluted environment. These costs, or these negative externalities of the public water industry, were simply not being monetised. One aspect of the counterfactual that we can comment on, to a degree, is the dynamic baseline of conditions in the wider economy. The graph on the top of this slide shows the UK Retail Prices Index, or RPI. RPI is one of two main measures of inflation that has been used by the UK Office of National Statistics. After the England and Wales water privatisation, UK RPI peaked around 10%, then fell to around 2.5% to 4% after 1992. The guideline average real rate of return set by government ministers back in 1989 was 7% for all the water companies. That's 7% return net of inflation for the 10-year period from privatisation in 1989 up to the first envisaged resetting of water prices in 1999. The bottom graph shows average nominal rates of return for the privatised England and Wales water industry from 1991 onwards. These nominal rates of return include inflation. These data are from the sector's economic regulator, Ofwat. We see a 12% nominal rate of return in the early 1990s, falling to around 5 to 6% in 2000 onwards. These nominal rates of return seem reasonable when adjusted for RPI inflation. And this is particularly so given the risks and uncertainties of future investment requirements to meet higher standards and so forth. To summarise, we've seen that the sale price set for the England and Wales water privatisation was tested by investor behaviour, so we know that this was a price investors were prepared to pay. It's difficult to know what would have happened to the industry if it had remained in the public sector. We will never know the counterfactual here. For instance, what might have happened to service and environmental quality standards if the industry had not been privatised? Would customers and the environment still be bearing costs of poor network and service conditions? Or would it have been possible to raise the capital some other way that was needed to rehabilitate water networks and to meet new higher European standards? What do you think? In this session's discussion forums, we'd like to hear your opinion on the following three questions. First, would customers have been better off if the England and Wales water utility sector had remained in public ownership? Second, do you think taxpayers received a fair price for the England and Wales water industry in the initial offering? And third, can you think of a better way that the initial public offering could have been designed to get a higher price? In the next 3 videos, we'll look at some outcomes of the England and Wales water privatisation. Thanks for watching this video.